Apologies in advance. The audio on this video might be as bad as last week. I did order a mic, but I didn't get the right adapter, so it doesn't plug in properly. So hopefully from next week we'll have better audio, and it will just sound a lot more crisp and clearer. But yeah, welcome to episode 2 of the Tharwa Invest portfolio updates. And what a week it's been. We'll be getting into that, but hopefully, a lot of people feel a lot richer this week after that monster move we've seen. I think the markets went up like 5% just this week alone. And now, if you imagine how the next 5, 6 months could look, just insane, insane. My goal is to scale to 10,000 subscribers as fast as possible. So do subscribe and like the video, and also feel free to share it to others. The goal is to bring up everyone's financial literacy so they take the plunge and actually start investing and building wealth so that they can have the best possible financial outcome in life. If you're new to Tharwa, then feel free to subscribe and add your email from the link in the description below to get any future portfolio updates. Over 1,100 people now use Tharwa, so best get yourself on it too. With that out the way, we do these videos in 3 parts. So first we'll look at how our portfolio is doing. Then we'll look at what has been the big news this week that moved the portfolio. And also we'll also look at the week ahead in terms of what financial things we can expect. So with how the portfolio is doing, the first part of the video, been a blockbuster week to say the least. The Tharwa Invest portfolio has returned 55.91% since inception in March 2023. So about 20 months ago now. This means the portfolio has averaged in that time about 2.79% a month. So £100 invested when we launched would have been now £155.91, which is a pretty decent return for 20 months. And also next couple of months when we start roaring into this next bull market, that number will probably, I don't know, I'm guessing it will probably push to the 70% mark by the end of the next couple of months. So that's not bad for a 2-year return, 35% a year, which is pretty good. In terms of my capital, I've invested about £20,817 so far, and my return is 21.31%. This is about £4,434 made passively the last few months. My portfolio profit has gone up by £1,400 in the last week alone and marks a new all-time high for the portfolio and all-time high profit as well. Crazy how the first year of Tharwa I made like £1,200 profit, and now this year is over like 2x that. So with a portfolio value of £25,000 now, if we somehow do get another 30% return next year, then that will mean my profit goes up by another £7,500, which is again another doubling of this year. So you can just see how the stock market is just this incredible wealth generating machine that compounds your wealth and money faster and faster. The longer you put your money into it and let the machine work, the faster and faster your money grows. And this is what the majority of people simply do not get and end up fumbling literally generational wealth. So it's so easy to build it, but very few have the vision and foresight. With that out of the way with the portfolio updates, the big news of the week, and it's a big one. Trump became the US president and absolutely whitewashed Kamala Harris. Like, to become the president, you need 270 on the electoral college. So it's basically a number of each state has a number of total votes comparing to the UK system. So when you win a state, you get a portion of those votes electoral college because the US is so big. That's how they have to do it. But yeah, the target was 270. He got 312, which is a strong win. And also, he got the popular vote as well. Republicans have the popular vote, they've got the presidency, they've got the Senate and the Congress. So literally, it's a red whitewash all across the board. Kamala, it's fascinating because the odds were it was going to be 50-50. So it'd have been hopefully a tighter race, but yeah, it came nowhere close. But I won't talk much on the politics, but I'll reflect on what it means for the market. The last time Trump was president, we saw a 200% rise in the market over 4 years. Uh, Potentially, we're in store for that again. The reason why the Trump administration is super bullish for the market is because his win and policies will allow more sector participation across the board and allows for a much healthier bull market, which can go on for longer than anyone can anticipate or foresee. He wants to cut corporation tax, so that will undoubtedly mean it will undoubtedly mean we've immediately boosted corporate profits. He wants to reduce regulation across all industries, which will let them increase investment as well as react better to demand and supply across sectors. So we're talking energy, materials, industrials, all these sectors that are heavily demand and supply focused and heavily regulated. And then he also wants to be pro business, so which allows for naturally for business activity to pick up. This all fuels a stronger economy, which would then fuel a stronger stock market. Uh, there are some concerns with his policies of being so pro business, with cutting regulation, cutting corporation tax, and so forth, and giving tax breaks to people, that it could be inflationary and we could see a bad market at some point during the next 4 years. But the red flags are not there yet. So, honestly, until they are, we just keep on moving along, stay the course. This is where the market gets real fun as you watch your profits go up and up. So, just stick to it. And then, upcoming in terms of news, so we all right. This is a probably maybe we might see a slight down week, but I don't think it's going to last long. But upcoming news for the week is we have comments from the Fed and also CPI next week. So this could potentially speed up the rally higher because yes, the Fed cut by 0.25% last week and reduced the base rate, but the forecast for December and the months ahead is important. Are we going to continue to cut or are we going to accelerate the cut? Basically, we know that cuts are coming. It's just about how fast they happen. And I definitely think the Fed wants to get interest rates down to 2.5, 2.75, 3%, that kind of territory. Ideally 3%, but that would need another seven cuts. Can they do 0.25% cuts, or are they going to whack in a few 0.5% cuts to speed that and decelerate faster? If they do, then that will definitely change how the stock market is being priced and how companies are valued. So next week is pretty important in terms of that, showing the trajectory of the market over the next 6, 12 months and possibly even 18 months. I just think the Fed will continue with the 0.25% next month in December cut for now, as the market is still euphoric from the presidential race. So there's no urgency in terms of cutting faster. But a surprise CPI report next week will definitely change post December outlook, in my opinion. If CPI looks like it's staying stagnant, and we see GDP numbers start falling or not meeting expectations, we could start cutting more aggressively, just to balance the books there. So that's one to look out for. But all in all, we're in an uptrend and we're going to still go up. So there's nothing to panic about really. The bull market is here. You better lock in if you haven't, and make the most of it. That's all for this video. Don't forget to like and subscribe. If you're new here, then feel free to add your email to the link in the description below to get any future portfolio updates, and feel free to follow me on any socials. If you're existing Tharwa customer, thank you for being a supporter for the last 2 years. Hopefully, we continue to grow our portfolios. And if you're new here, definitely get involved. Other than that, I will see you next week. Goodbye.